So welcome back to the final part 4, where I do some analysis. And you know, just a reminder, so you know, if we've got a lot of inflation data leading up to the FOMC meeting decision this coming week, so you know, expect some big moves, I would say. And of course, you know, it's going to be a question of whether they're going to skip or they're going to do 25 basis points for the Fed. And of course, CPI could swing it one way or the other. And then, of course, you've got ECB, which is pretty much a done deal for a 25 basis point increase. Now, the indices analysis, just going to warn you here, I've moved on now to the September futures contract, as June expires this Friday as part of the quad witching. So just a reminder of the legend. So black numbers in the right hand column, they are going to be support and resistance levels based on trend lines. Brown numbers are breakout levels. Claret numbers, these horizontal lines that I put in, are either levels where I see support or resistance, or whether they're on double, triple tops or bottoms. Just a reminder of the pivot point colors and also the fib colors, and there is at least one chart with the fibs this week. As usual, I'm going to start with the Dow Jones. So I've managed to get sort of a few lines in there for resistance. Obviously you can see them. So I've got resistance at 35,423, 35,167 and 34,957, which is, you know, it's going to depend where the market opens. So it's a little bit of a pivot one. It could, you know, it could be a support or it could be a resistance, because it closed fairly close to that. You know, stocks had a very good week, especially after that massive push up on Tuesday from the CPI data. And then support wise, I've got 33,915, so a bit of room on the downside there. Moving on to the 30-minute, you know, I struggle to find many decent levels. So my philosophy is, if I can't see a level, I'm not just going to make one up. So I've got 35,251 as resistance, and I've got 34,917 as support. You know, on Friday, sort of the market rejected R1, came off very nicely from the pivot points, and then, you know, sort of heading down towards S1, didn't quite make it, and then it got very sticky around the pivot point after that. So moving on to the S&P. So with the S&P, I've got resistance at 45.39 and support at 43.33. On the 30-minute, I got resistance at 45.39 and 45.31, with support at 45.07. So again, you know, there's a little bit of a void, a gap between those, but you know, for me, I don't mind, because I'd rather have good levels than just any level. Now, when we look at this as well, as a bit like the the Dow, you know, it struggled when it got to that R1, rejected that, and then the market came off. So it had a double top, as well as just being over the R1 level, which was a great opportunity to sell. So with the Nasdaq, again, another steady week. So resistance 15,944 and support at 15,412, and then much lower down at 14,248. Moving on to the 30-minute, I got resistance at 15,943, support at 15,873, and further support at 15,812. As you can see on the 30-minute, pivots work lovely. You know, it sort of rallied up to test that R1 almost to the tick or pip, was rejected there. But the great thing is that it went down to test S1 first before it rallied all the way up there to R1. And then of course it came and settled fairly close to the pivot point. So that was an excellent opportunity. Moving on to the Russell 2000, so small caps. So here I've got resistance at 1841 and 1834 with support at 1684. On the 30-minute, I've got resistance at 1808, 1804 with support at 1800, so there's going to be a breakout one way or the other there pretty early on when trading gets going. And then support at 1780, and again, you know, it sort of highlights not so much a lack of interest, but just the impact that the economy's already having on those small caps and higher interest rates, etc., consumer demand. You know, where the others have had big moves over the week, here you're seeing it was contained well within sort of the pivot point and R1 all afternoon. Moving on to currencies, pound against the dollar, I've got resistance at 125.16. I've got support at 122.33 and 120.95. You know, it's been very much a dollar story rather than a cable story, you know, not too much from the pound. Although, of course, we've got the budget this week, so we might see a little bit of a reaction on the pound to that. Then moving on to the 30-minute, I've got resistance at 124.77, 124.68, support at 124.50, and then lower down at 123.82 and 123.79. And again here, so you can see that the way the dollar weakness came in last week, especially after the CPI data on Tuesday. So here for the euro, I've got resistance at 110.72. We haven't seen it up there for 2 or 3 months. And then also at 109.31. Support at 106.70 and 105.20. Now on the 30-minute, you know, I've got sort of a fairly good resistance line there, a trend line. Again, it's just going to matter if that holds in from the start of the week. So that is at 109.31. First support at 109.08, just because that was sort of previous highs. So if it gets down there, you know, whether it's going to hold, we'll have to wait and see on that one. You know, from sort of mid-afternoon on Friday, sort of the pivot became the support for sure. And then when we look down for support, I've got 108.46. Okay, so Bitcoin, you know, it's had that sort of very quiet, subtle, under the radar rally. It did it very quickly. It's consolidating. You know, it's 1,000, 2,000, but it's you know, it's for me at the moment, it's got a little bit of an uptrend. And so I've got resistance at 38.727 and support at 35.012. If it does start to break on the downside though, I've got a breakout at 31.700. On the 30-minute, I've got resistance at 37.050 and also at 36.636 with support at 36.055 and 35.600. Again, as usual, we're just taking a little look, more for fun than anything else, I think, at the moment, and obviously unless you trade this, which is the Bitcoin against stocks. So, you know, you see generally there's that inverse relationship, but there are times, you know, remember this is a daily, so there are times when they do start to line up perhaps a little bit more than you would expect. Okay, so gold had a bit of a move last week. It was all the way down, testing the 1935s, and then towards the week, end of the week, it was almost back up, testing 2000. So I've got resistance at 1996 with support at 1947. Then in that sort of turquoisey colour lower down, 1860, 1847. Obviously, you know, it's $100 away from there at the moment, but the reason I'm sort of highlighting that is because it's a gap. And okay, at the moment it's not going to go and fill it, but if you know, at some stage, if you get any pressure, come on, that gap's just going to stay there. So it doesn't matter whether it's today, next week, next month. It's worth writing it down and remembering that that gap is there for any particular sell-off that we see. And again, another contract that sort of held within sort of R1 and the pivot point quite nicely, I must say. And so I have their resistance at 1987, 1984. With support at 1981, so that's going to break out pretty quick. Next level of support below that is 1964. Here we're looking at WTI. I've put the fibs on here, the Fibonacci levels. So, you know, as we can see, the market's been down, popped through. And of course now it's on its way back up, but you know, it's a matter of whether it can sort of get any decent rally going. I mean, it did become sort of fairly bearish. You know, I think the rally initially was concern about what could happen in the Middle East. And once that sort of panic subsided, again, you know, so much going on in the background politically to prevent that, I would say, that for the moment, you know, the pressure's been on oil. I'm not saying it's going to stay there, but, you know, what is fair value for it at the moment? So there's the fib levels in there. I've also got a resistance level round about the 84.25. And then below that I've got support at 72.17. So again, quite wide. OPEC Plus can't be happy to see these prices. That's on the back of my mind. I think you've probably seen some US buying where they've been replenishing their strategic reserves that they hold. Because remember, when the markets had a big rallies, they released some of that to try and put pressure and actually add some supply. But overall, I would say that, you know, seeing these sort of prices, OPEC, Russia is not going to be so happy. So finally, here is the 30-minute. I've got resistance at 76.50. 76.11 based on those trend lines. I've got a sort of a breakout level for me. If it gets below that 74.96, I'd expect it to have a bit more of a sell-off and perhaps go down to test the support that I found at 73.06. So that's pretty much it. I do have a couple of things going on this week. On Thursday, there's an open workshop where you can just pop in and join in, ask me any questions that you've got, whether it's technical analysis or trading, risk management, whatever it happens to be. I'm going to post that on LinkedIn from Monday all the way through to when I'm going to hold that on Thursday. just watch out for our website as well, because we'll be posting it on there, and also on our social media, as everybody does. So that's an interesting one. Then on Friday, you know, again, it depends how you trade. If you're interested in options, or if it's something you're steering away from because you don't understand them, then Friday I'm doing a one-day workshop. There is a fee for the Friday one, whereas the Thursday one is free. And the Friday one is where I'm going to go through options my style. I very much simplify trading options. It's very clean, very easy. Practically anyone, whatever level you are, will understand the philosophy behind the way that I do that. And as usual, apart from that, there'll be some technical analysis, some risk management, some trading techniques thrown in, lots of trading tips that I've picked up through my 50 years in the markets. And again, you know, anyone who's got any questions, they can aim them at me. I'll be actually doing some demonstration using live data, so you can see that. And yeah, so it should be a fun day. Also, I'm going to cover, you know, mistake on both days, actually, mistakes that traders make, and of course how to correct them, because that's very important. So I hope you can join me for Thursday or Friday, or hopefully even both. So anyway, just go on to the final bit of the slides, and see you next week. Again, just finally, a little reminder of what we do. So apart from the YouTubes, daily newsletters that go straight to your inbox each morning, to provide you with global headlines, global news, and also my views. And then if you'd like to subscribe, we also provide chart levels and pivot points. When it comes to courses, we offer everything from one-day workshops, 1 week courses. One of those includes a free trading challenge, up to the comprehensive masterclass, which is an accredited course, and the next one of that starts in a week's time on the 19th of June. So if you're interested, then contact us quickly, because those places won't be around for long. Now, also trader mentoring, where we help traders improve and get to that next level time and again. We consult to companies, FX and commodity exposure. We provide a whole platform and mass of educational content to individuals, exchanges and brokers. And as usual, we start with our disclaimer. So trading involves the potential risk of loss of capital. It's not suitable for everyone, although hopefully it is for you. When it comes to leverage, just be careful, because you can lose substantially more than that initial investment. Everything we include in here is just purely for educational purposes. You know, we're not trying to provide you with advice. We're just trying to help you prepare, understand the markets better, to help you make better decisions. But of course, you know, if you are looking to invest or trade, that has to be your decision. And before you make that, you should consider your financial situation, your level of experience and your risk appetite. And of course, on your risk capital, you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before risking your capital.